What's up, everybody? Welcome back to Royalblufx. In today's video, we're going to talk about how we made $1,225 in 23 seconds. So let's begin. But before we go any further, I just want you guys to go ahead and subscribe to this video because we always give out free content. And to answer the big question, we are already about to release the course just about within the next few days. We will give out the big announcement on our YouTube channel and on Instagram. And if you guys aren't following us on Instagram, go ahead and follow us right now at Royalblufx. Blue is BLU.fx. So let's begin with this video. All right, you guys. So for some of you that are wondering how we made $1,225 in the span of 23 seconds, here's how we did it. So if I drag your attention to this chart right over here, you can see that this is actually a live account right there. All right, and we always trade the US 100 NASDAQ, which is right here, right? You can see the NQ sign right there. And we simply do this, right? We're heavy scalpers, but we also do, we are also starting to look at, long-term traders as well to trade long terms. So here we go. So what we normally do is we obviously look at the higher time frame. Now, given that the top step doesn't provide me with replay, I simply have to sort of back the chart out a bit, but in simplest forms, what we're doing here is we're following the higher time frame intention, right? The higher time frame intention is whenever there is a sweep of liquidity, in this case, a sweep of low, sweep of inducement, right? And we start seeing price rise like this, right? We're simply looking for prices to sweep internally, right? So if the session of the day, which is New York, opens up and sweeps either a low, right, or sweeps form of liquidity, like it could even be double bottoms like this, we simply look to profit off of the sweep, right? Sweeps the liquidity and then runs the other way, and that's what we've been doing right here. This is what we've been doing. So if I drag your attention right down here, let me just delete this. I'll show you this quickly. Okay, you can see the intention of what New York did over here. New York starts for us at 6:30, so you can see my cross lines add up to cross over with 6:30 right there, 6:30 Los Angeles time. That's New York time for us. And then you can see just over here that liquidity was swept. So if liquidity was swept, what do? Right? We trade away. So we quickly went from the 1 minute or from the 3 minute down to the 1 second, right? We actually wanted to profit off from the trade starting here at the get-go, at the origin of the move. So there was no other internal sweeps, right? So then what do? We follow price as it's moving bullish, and then we see more liquidity right here presented for us, right? So we had an impulse, retracement impulse right over here. We do see a swing low presented in here. So we did mark that swing low, waited for price to get to this, right? To sweep this low. Not only did it sweep this low, but it also swept this low as a given liquidity. This is also a low that signifies inducement as well. So is this, right? But once it forms a liquidity, it's just, once it forms two lows like this, it's your relative lows. It does sweep the low just a bit below. So we had it where we didn't just enter right away. What we do is we wait for price to sweep the lows, right, and then show some sort of momentum, okay, some sort of promise of momentum that price is wanting to move bullish. So once price actually started to run, then we entered the market. So my entry wasn't right here per se; it was actually right above, somewhere like right over there. It is right when price closed above, right, and then price started running bearish a little bit, just like that. So we enter the market. And as soon as we entered it, right, prices started to run for 23 seconds. Now, you might be wondering, why on earth did I target this high? Well, like every higher time frame structure, okay, because everything is fractal, everything needs to be swept. And liquidity is normally swept on the New York session. So again, like I just want to iterate here how it swept this low, right? So it swept all the buyers, right, the buy side liquidity and the sell side liquidity, right? So the sell side and the buy side liquidity. So that's why when we were looking to buy here, you were most likely taught to never target supply and demand zones, right, or to trade into, premium, right, or discount. However, this made a lot of sense because if you understand how New York moves or the NASDAQ, then you'll understand that price had to go above the highs. It was meant to go above the highs to sweep in order to run price somewhat bearish, right? At least the retracement. So in this move here, when we did see a sweep of liquidity, we just knew that a bunch of liquidity was forming internally there. We already saw it when price was running bearish. We also knew that this was the main high that price had to sweep in order to trick the traders, right? Trick the the sellers here, right? And in order to take out the sellers here who sold randomly on the far left there, right? Or who were most likely trading at supply and demand or what have you. But in any case, if you need to understand the intention of the NASDAQ or the indices in most cases, they sweep the highs and lows on the New York session. Right? It doesn't happen all the time, but it happens quite often. And so these are the moments that we always wait for. So again, guys, we just entered here, targeted the high, that was it, right? There's no real trick to this. It's more of waiting to see your setup every time, right? And my setups are this. This is exactly what I do. Wait for the sweep and then wait for price to run, to show me some sort of guarantee that price is running bullish. And then we wait for the internal structure to reverse. Now, it doesn't necessarily mean that you can have to catch your buyers at the low if they're not presented at the very low, at the origin or at the demand, at the discounted level, not the demand, discounted demand, both have the letter D. All right, so if it doesn't have it here, then obviously what we're doing here is we're following the intention and the impulse. That means that so much liquidity was swept at this very low that price is willing to continue bullish. And we're using that momentum that once price has swept that low, then we're using the intention to go and take out more liquidity, right? So we're using the liquidity, the momentum, to take out more liquidity, the opposite, right? The opposing liquidity, which is the pretty much here, right? And the swing high. And that's how we made, right? $1,225, guys. You guys will see a screenshot of this somewhere around the video. Go ahead and check that out and go ahead and see what we did there, obviously. So until then, guys, I hope you enjoyed this video. I know this was very quick. If you guys do want to trade the way we trade, obviously, we'll be releasing the courses like we've mentioned, right? And then, like we said, we'll mention it on our Instagram and our YouTube channel. Apart from that, right, I just do want to mention one thing quickly before I end this video. But you can see the setup in just about anywhere, right? So one thing we want to always let you know is that whenever we're trading this type, right, this type of style, we always look at the intention of the open of the markets, right, or the open of New York, because in the first 30 minutes to an hour, the markets run fast, and there's a lot of liquidity involved. So we want to be where the liquidity is, right? Because towards the end of the market, liquidity starts to die. It does it starts to digress a little bit, right? Candles become very small, and it takes, many little candles to create one entire move, right? Which is where you understand that the buyers are not as active anymore, right? Because the traders are a lot of the traders are involved in the beginning, right? And the origin of the moves, right? And then, so that's it, right? And then you can always see the same example that we did there on just as many other moves, right? It's not just this one, obviously. You can see here again we had another sweep, right? So we had a low, then a high, a low. This low swept, right? Then we're looking for price to run bullish again. Using the same tactics, the same methods that we use on here, right? They're just everywhere. And if I mark them out for you guys, you will see this, right? Like there is another one, right? There is another one here. You can see that right there. There's a low, high, right? You can also include this low as well. And you can combine this low and this low, right? So if it's these two lows here, that means it's trendline liquidity, right? And you can see wait for price to reverse. So they do, right? Let's just kind of, let's look at a little more here. Oh, you can also see this here from a larger perspective, right? There's your low, there's your high, a bunch of liquidity sitting right here, right? Just like that. So we could combine all this liquidity, right? And then look for prices to run bullish from here. Now, this is different because this over here is in fact just liquidity, right? So liquidity traders are also manipulated, which means that this becomes your inducement right there. So when liquidity traders try to buy the market here based off of this trendline liquidity right here, right, you can see that these guys were the buyers. Then price runs, right, comes back to manipulate them, and this becomes our inducement. So then this, you can put it liquidity or you can put it as an inducement line, right? And this would be your entry. However, you can also wait for prices to run again for more confirmation bases, and then you can look for your next sweep internally, just like this. Once price swept the main low, you can see price ran, right? So there's your low, there's your high, low, high. Price comes down below the low, and it sweeps this low, and you can enter again for the next impulse, right? So you can see just in so many ways that price repeats itself over and over and over, right? And then and that it constantly, it just shows itself, right? So you can catch one trade, two trades, you can catch as many trades as you want within that day, right? But another thing is don't over trade. If you overtrade, you're overexposing yourselves in the markets. You want to reduce your risk of becoming too exposed in the markets, right? So once you make money, once you make profits, you do want to give yourself the benefit of just relaxing for the rest of the day and let a new day restart, right? All right, guys, so I hope you guys enjoyed this video. If you did like this video, go ahead and throw a thumbs up and definitely subscribe to this channel. Also comment on this video. Let me know what your thoughts are. I'm very interested in what you guys think. Until then, guys, I will see you in the next video.